Imagine a time, not so long ago, when the hum of an electric car was still a strange, almost futuristic sound on the streets. Gasoline flowed freely, but a nagging whisper of its finite nature and its impact on our planet was growing louder. A few audacious visionaries saw a different future, a cleaner one, powered by something entirely new. It was a chaotic, exhilarating race into the unknown. And in this nascent, hopeful dawn, a company called Coda Automotive tried to carve its path. It's the crisp, optimistic air of early 2000 Silicon Valley, a place where ideas feel as abundant as the sunshine, and the scent of innovation hangs heavy. Google is king, Apple is resurgent, and a new kind of entrepreneur dreams not of software, but of horsepower, reinvented. The first whispers of a global climate crisis are turning into a roar. Fuel prices are volatile, and the world is desperate for an alternative. This fertile ground gives rise to small, ambitious ventures, among them Miles Electric Vehicles. Founded in 2004 by a visionary named Miles Rubin, this company initially focuses on low-speed electric vehicles, the kind you might see puttering around a university campus or a resort. But Rubin and his team, including future Coda CEO Kevin Zinger, harbor a much grander ambition: to build a full-speed, highway-capable electric car for the masses. They scout the globe for technology, realizing that the key to a viable EV lies in its battery. Their search leads them to China, to a company called Lishan Power Battery. Lishan is developing advanced lithium-ion battery packs, exactly what Miles needs to power its dream. In 2009, this grander vision formally breaks away, becoming Coda Automotive, named for the musical term signaling the end of a piece. Their goal is clear: design an electric sedan that doesn't compromise on range or everyday usability, assemble it in California, and launch it by 2010. They secure substantial funding, raising over $270 million from investors like Miles Rubin himself and the prolific venture capitalist, Angeleno Group. Coda isn't just selling a car, they're selling an ecosystem, promising not only the vehicle, but also an innovative battery solution that could outshine the competition. Their car, based on a platform from China's Hefei automobile, is poised to enter a market just beginning to wake up to electric possibilities. It's a bold plan, meticulously crafted, and for a fleeting moment, it looks like Coda Automotive is set to be a major player in the electric revolution. But as the calendar pages turned and the promised launch date slipped further and further away, the landscape around Coda was shifting dramatically, preparing a brutal test for its ambitious vision. The year is now 2012. The air in California's nascent electric car dealerships buzzes with a nervous anticipation. Though for Coda, the buzz is mostly silent. After multiple delays, the Coda sedan finally rolls onto American roads. It's not the sleek, futuristic machine many hoped for, but a four-door sedan with a somewhat dated utilitarian aesthetic, a design critics describe as bland or uninspired. Its core selling point remains its 31 kilowatt lithium-ion battery, promising an EPA-rated range of 82 miles, which, while competitive, isn't groundbreaking. The real problem, however, lies in its arrival. When Coda Automotive first envisioned its vehicle, the EV market was largely barren. By 2012, it's a very different world. Nissan has already launched the Leaf, a purpose-built EV that looks distinct and carries a recognizable brand name. Chevrolet offers the Volt, a plug-in hybrid with the comfort of a gasoline range extender. And then there's Tesla, a company Coda founders must have dismissed as a niche luxury player, now building immense hype around its soon-to-be-released Model S, a car that would redefine electric performance and luxury. Coda's strategy, built on robust Chinese-sourced battery technology and American assembly, felt increasingly out of step. The pricing doesn't help. The Coda sedan debuts with a sticker price of $40,900 before a $7,500 federal tax credit. This puts it at $37,400, directly competing with the Leaf and other established, more appealing vehicles. For a relatively unknown brand with an unproven product in a conservative design, this is a monumental ask. They try to establish a unique distribution model, initially focusing on direct sales, then slowly partnering with a handful of dealerships, predominantly in California. Their initial promise to deliver a reliable, no-frills electric car is now overshadowed by a market demanding innovation, style, and prestige. The coda in music signifies an ending, but for the company it feels more like a beginning that arrives too late, missing the crucial window of opportunity. The grand vision of an electric ecosystem, once a strength, now feels heavy, bogged down by the realities of a rapidly evolving market. As the months tick by, the sales figures for the Coda sedan are not just disappointing, they are catastrophic, sealing the fate of a dream that promised so much. The Californian sun still beats down relentlessly in the spring of 2013, but for the team at Coda Automotive, the light is rapidly fading. The dismal sales numbers are in. By the time Coda files for bankruptcy in May 2013, it has sold an estimated 100 to 200 vehicles in total. This is not just a commercial failure, it's a stark, brutal testament to a misjudged market and an uncompelling product. The company's cash reserves, once a strong foundation, are hemorrhaging at an unsustainable rate. Despite raising significant capital and employing hundreds, the Coda sedan simply fails to resonate with consumers. The company tries desperately to pivot. In its final months, Coda attempts to rebrand, focusing on its lucrative battery technology and energy storage solutions as Coda Energy. The idea is to sell their advanced battery packs not just for cars but for stationary storage, for homes and businesses. This shift reflects a recognition that their core strength might not be in car manufacturing, but in the power behind it. However, it's too little, too late. The automotive division, which burned through the vast majority of the company's capital, becomes an anchor, dragging the entire enterprise down. On May 1, 2013, Coda Automotive files for Chapter 11 bankruptcy. The dream of a homegrown electric car for the masses is officially over. In the aftermath, the assets are picked apart. The most valuable piece, the battery and energy storage division, is indeed salvaged. It reemerges as Coda Energy, which is later acquired by a renewable energy company, becoming part of a larger energy storage narrative. The remaining vehicle assets, including the roughly 70 unsold Coda sedans and spare parts, are eventually sold off in auctions. What remains is a cautionary tale, a ghost in the annals of automotive history. Coda Automotive's ambitious pursuit of an electric future serves as a stark reminder that in the race for innovation, timing, design, and market understanding are just as crucial as the technology itself.